Exchange-Traded Fund, ETF, what it is, and how to invest. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. What is an exchange-traded fund? An exchange-traded fund is a pooled investment security that can be bought and sold like an individual stock. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of securities. ETF can even be designed to track specific investment strategies. Various types of ETF are available to investors for income generation, speculation, and price increases, and to hedge or partly offset risk in an investor's portfolio. The first ETF was the SPDR S&P 500 ETF, which tracks the S&P 500 index. How ETFs work. An ETF must be registered with the Securities and Exchange Commission. In the United States, most ETFs are set up as open-ended funds and are subject to the Investment Company Act of 1940, except where subsequent rules have modified their regulatory requirements. Vanguard's Consumer Staples ETF tracks the MSCI U.S. Investable Market Consumer Staples 25/50 Index and has a minimum investment of $1. The fund holds shares of all 104 companies on the index, some familiar to most because they produce or sell consumer items. Types of ETFs. Passive ETF. Passive ETFs aim to replicate the performance of a broader index, either a diversified index such as the S&P 500 or a more specific targeted sector or trend. Actively managed ETF do not target an index of securities, but rather have portfolio managers making decisions about which securities to include in the portfolio. Bond ETF, used to provide regular income to investors, and distribution depends on the performance of underlying bonds, which may include government, corporate, and state and local bonds, usually called municipal bonds. Stock ETF, a basket of stocks that track a single industry or sector like automotive or foreign stocks. The aim is to provide diversified exposure to a single industry, one that includes high performers and new entrants with growth potential. Industry or sector ETF funds that focus on a specific sector or industry. An energy sector ETF will include companies operating in that sector. Commodity ETF invest in commodities like crude oil or gold. Commodity ETFs can diversify a portfolio, making it easier to hedge market downturns. Currency ETF track the performance of currency pairs consisting of domestic and foreign currencies. Currency ETFs can be used to speculate on the prices of currencies based on political and economic developments in a country. Bitcoin ETF. The spot Bitcoin ETF was approved by the SEC in 2024. These ETFs expose investors to Bitcoin's price moves in their regular brokerage accounts by purchasing and holding Bitcoins as the underlying asset and allowing them to buy shares of the fund. Inverse ETF earn gains from stock declines by shorting stocks. Shorting is borrowing a stock, selling it while expecting a decline in value, and repurchasing it at a lower price. Leveraged ETF. A leveraged ETF seeks to return some multiples on the return of the underlying investments. If the S&P 500 rises 1%, a 2-leveraged S&P 500 ETF will return 2%. Buying ETFs. ETFs trade through online brokers and traditional broker-dealers. Many sources provide pre-screened brokers in the ETF industry. Individuals can also purchase ETFs in their retirement accounts. An alternative to standard brokers is a robo-advisor like Betterment and Wealthfront. ETFs are available on most online investing platforms, retirement account provider sites, and investing apps like Robinhood. Most of these platforms offer commission-free trading, meaning that investors don't have to pay fees to the platform providers to buy or sell ETFs. Popular ETFs. Below are examples of popular ETFs on the market. Some ETFs track an index of stocks, thus creating a broad portfolio, while others target specific industries. SPDR S&P 500, the oldest surviving and most widely known ETF that tracks the S&P 500 index. eShares Russell 2000, an ETF that tracks the Russell 2000 Small Cap Index. Invesco QQQ, an ETF that tracks the Nasdaq 100 index, which typically contains technology stocks. SPDR Dow Jones Industrial Average, an ETF that represents the 30 stocks of the Dow Jones Industrial Average. Sector ETFs, ETF that track individual industries and sectors such as oil, energy, financial services, real estate investment trusts, and biotechnology. Commodity ETFs. These ETFs represent commodity markets, including gold, silver, crude oil, and natural gas. Country ETFs, funds that track the primary stock indexes in foreign countries, but they are traded in the United States and denominated in US dollars. Dividends and taxes. Though ETFs allow investors to gain as stock prices rise and fall, they also benefit from companies that pay dividends. Dividends are a portion of earnings allocated or paid by companies to investors for holding their stock. ETF shareholders are entitled to a proportion of the profits, such as earned interest or dividends paid, and may get a residual value if the fund is liquidated. Creation and redemption. The supply of ETF shares is regulated through creation and redemption, which involves large, specialized investors called authorized participants. When an ETF wants to issue additional shares, the AP buys shares of the stocks from the index, such as the S&P 500, tracked by the fund, and sells or exchanges them to the ETF for new ETF shares at an equal value. In turn, the AP sells the ETF shares in the market for a profit. Exchange-traded funds represent a cost-effective way to gain exposure to a broad basket of securities with a limited budget. Investors can build a portfolio that holds one, many, or only ETFs. Instead of buying individual stocks, investors buy shares of a fund that targets a representative cross-section of the wider market. However, there are some additional expenses to keep in mind when investing in an ETF. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.